You've seen the headlines, right? You've definitely felt it at the pump. The price of crude oil is always on the move, and it shapes everything. But what is really going on behind those numbers? All right, let's get into it.
It seems like a pretty simple question, but the answer, well, it's incredibly complex. You see, the price of oil isn't just about simple supply and demand. It's really about fear, it's about global strategy, and it's about raw power. It's a story that often starts not in a corporate boardroom, but on a battlefield.
I mean, just look at what happened in 2022. In February, when Russia invaded Ukraine, the markets didn't even wait for the oil to stop flowing. Just the fear of a disruption was enough to send things into a spiral. Sanctions followed, and by June, crude oil prices had absolutely skyrocketed to over $120 a barrel, a high we hadn't seen in years. It was a perfect and pretty scary example of how fast geopolitics can light a fire under the entire market.
And that quote right there really gets to the heart of what we're talking about today. Think of the price of oil as this massive global tug of war. On one side of the rope, you've got these powerful forces like fear, pulling supply down and yanking prices up. And on the other side, you have the hard realities of the global economy pulling back. So let's meet the teams, shall we?
First up in this global tug of war is the absolute wild card, geopolitics. This is the force that can, out of nowhere, suddenly yank the rope and send everybody stumbling.
So what are we really talking about when we say geopolitics in the oil world? We're talking about wars and regional conflicts, trade sanctions, political chaos in countries that produce a lot of oil, even just the security of the shipping routes oil has to travel. In this world, a headline from some volatile region isn't just news, it's a direct signal to traders, and it can move prices seriously within hours.
For a really powerful example, just look back to the early 1980s. When the Iran-Iraq War broke out, it directly threatened oil fields and some of the most critical shipping lanes on the planet. The entire world just held its breath. And the market's reaction? It was immediate. You see this massive surge in crude prices. But what's so fascinating here is that the initial jump, that huge spike, happened before a single supply line was actually cut. It was driven purely by the risk, the sheer possibility of a disruption. And why was that risk so incredibly high? Because the whole conflict threatened the Strait of Hormuz. Get this, a staggering 20%, that's 1/5 of all the world's crude oil, passes through that one single narrow waterway. If that choke point closes, it's a catastrophic shock to the entire global supply, no question. Okay, so beyond those sudden geopolitical sparks, there are players who are trying to control the supply side of the rope every single day. And it's time to meet the most powerful player on the field, OPEC+. So OPEC+ is basically a coalition. You've got the original 12 OPEC members, and they've teamed up with 10 other major oil producers, most importantly, Russia. Their stated goal is pretty simple. They work together to regulate the supply of oil. Why? To manage, or let's be real, to influence the price on the world market. And believe me, they have some serious muscle to back it up. Just look at this. The members of OPEC, by themselves, control over 80% of the world's proven oil reserves. So they're not just players in the market, you could argue they are the market's foundation. But here's where it gets really interesting. There's this constant tension at the very heart of the cartel. See, every individual nation wants to pump and sell as much oil as it possibly can to make the most money for itself. But the cartel's collective power comes from doing the exact opposite, from cutting supply to force prices higher for everyone. So what you have is this constant battle between a nation's own self-interest and the group's collective power.
Now, the thing that holds this entire global trade together is a financial system that's been around for decades. It's called the petrodollar system, and it's the reason the US dollar is so tangled up with the world of oil.
So, what on earth are petrodollars? First off, it's not some kind of separate currency. It simply means that when oil is sold, the payment is made in US dollars. When a country like Saudi Arabia or Nigeria sells its oil on the global market, they get paid in greenbacks. Simple as that. But then what happens to all those trillions of dollars? This is where it gets really clever. So first, the oil is sold for US dollars. Then the oil-producing nations take those massive revenues and they have to invest them somewhere. A huge chunk of that money gets recycled right back into US assets, especially things like government bonds. This creates this deep, almost symbiotic financial loop between the oil producers and the US economy.
Okay, so we've got geopolitics causing sparks, we've got a cartel trying to manage supply, and a whole financial system built on the dollar. So what? What does all of this actually mean for the rest of the world? And, more importantly, for you?
Well, the impact is immediate and it spreads everywhere. Let's go back to that 2022 price shock. During that time, stock markets in countries that have to import their oil, they fell. Why? Because investors knew that higher energy costs would put a massive strain on their economies. And this creates a really clear divide of winners and losers. For the oil exporters, think Russia, the Gulf states, a price spike is like hitting the lottery. It's a massive windfall that pads their national budgets. But for oil importers, it's the opposite. It means higher cost for literally everything, which leads to inflation and can slow down their entire economy. You see, one country's boom is very much another country's crisis.
And this isn't just some abstract economic theory. That higher price for a barrel of crude eventually, always, finds its way to you. It's not just the pain at the pump. Since oil is crucial for transportation and manufacturing, it means higher prices for food at the grocery store, for shipping that package you just bought online, and, yeah, for the price of your next plane ticket. So, with all these powerful forces pulling on the rope in different directions, where are prices going next? Let's take a look at what the analysts are thinking. Right now, analysts see three main possibilities. The base case, kind of the business as usual scenario, is that there's enough supply to keep prices stable, somewhere in the $60 to $65 range. But, and it's a big but, if we see another major geopolitical event, like a sustained conflict in a key region, prices could surge into the $90 to $130 range. And on the flip side, if the global economy slows down, demand could get crushed, pulling prices all the way down to $50. The big takeaway here is just one word: uncertainty. The ongoing war in Ukraine, simmering tensions in the Middle East, the unpredictable relationship between the US and China, all of these hotspots pretty much guarantee that volatility is going to be the name of the game for the foreseeable future. So when you boil it all down, the price of a single barrel of oil is so much more than just a number. It's really a barometer for global stability. It's a reflection of our world, a measure of our collective fear of conflict, the strategic greed of powerful nations, and the cold, hard realities of our interconnected economy. Which, of course, brings us right back to that global tug of war. It's a constant, shifting battle. And the only question that really matters is, tomorrow, who's going to be pulling hardest on the rope?